SD Boyan.
This is the Doc and Eric Dubin with the SD Weekly Metals and Markets. The big story tonight is the epic raid Friday in the paper metals markets. As over 500 tons of paper gold were dumped on the market, triggering sell stops and capitulation in gold and silver, as gold broke below 1500 to 1485, and silver broke below significant long-term support at 26, reaching as low as 25.72. It was truly an epic sell-off, bringing back memories of the May 2011 silver collapse, Eric.
Yeah, and in putting it into the context of the last 2 weeks or so, as the news front has evolved, we've seen this is probably the most coordinated the cartel has ever been. I mean, we get a call from Goldman speaking about the sector coming further down, and they further ratcheted their price predictions down from their previous November 2012 call about the bull market coming to an end. You know, hedge funds have their largest short position in silver since 2011, and almost at par with the most that they've ever had ever. You know, high net worth clients are being told, get the heck out of precious metals, because Goldman's made their call, and you can see QE is going to be reduced sometime later this year, given all of the propaganda that's coming out of the Fed. And even the Fed's minutes this week were really interesting. I mean, first they release it by accident, quote unquote, and then speak about how the majority of the voting members of the FOMC are now more inclined to you cut back on QE early, yet, you know, it was only late March that they were sending out the exact opposite message by one of the Fed board members, I think it was Cota, who was saying that he believes that unemployment should be targeted at 5.5%, as opposed to the 6.5% that Bernanke and company are telling us that they're going to wait for before they end QE. And, you know, they keep flipping back and forth depending on what the market conditions require. When he made that statement, the Dow was beginning to roll over in the end of March. People were really worried about this whole QE liquidity injection ending that's also supporting the stock market, which is in the interest of the Fed. So they have all of these contravailing dynamics that they're trying to juggle, and we see that manifest every time the propaganda meme changes when they turn on the PR machine.
And the Fed propaganda was really a large part of today's raid. The Fed came out and claimed that they're not going to engage in a competitive currency devaluation war with the Japanese, trying to claim that they're not going to one-up the Japanese with QE and that they're going to taper off QE towards the end of the year, which is pure propaganda and MOPE, and was used to smash gold below its support at 1550 and ultimately even under 1500.
And all the while, the dollar basically did nothing today.
It was kind of surprising. There wasn't really much follow-through to the morning's small rally. We haven't yet seen really a conviction buying spike up, at least in the paper markets of any sort. The physical buying is another story entirely, and we'll get to that. But in the paper futures markets, we breached the low of 2602, which was the low for the entire 2-year correction in silver early this afternoon. But then we had a 50-cent sell-off right at the end of the access session to close the week at the access market at 28.585. And really with that sell-off, in my mind, there's significant risk of a gap down overnight Sunday and into early Monday, as there's really a big air bubble, and the next major support to the downside is around 22, the 2150 to 22 area. And at this point, I'd give the odds at least 50% or 50-50 of a final gap down spike low washout, with silver dropping potentially as low as 22 and gold potentially testing 1400 early next week. And the odds of that at least 50-50. But really, Eric, that being said, just today, Friday, silver was down almost $2, nearly 7%. Gold was down $85 on the day, just about 6%. It was the largest single-day gold decline since the February 29th Leap Day massacre last year, the same day LTRO2 was announced in Europe. And gold hasn't been trading in the upper 1400s since the summer of 2011. So professionals are buying into this weakness now. They were all day. They were buying in size. And really, if you look at the fundamentals of the markets, with Japan going nuclear on their QE last week, the entire Cyprus bail-in situation going global with the news over the last couple weeks, breaking out that really all the Western nations have planned the same style of bank bail-ins for future bank crises. The weakness in gold and silver today are being responded to by professionals with massive accumulation.
And you can add China to that, too.
So even though we do have a potential for a capitulation spike low, today's weakness really needs to be responded to professionally with accumulation, although it might be prudent to save a bit of dry powder if we do have a final capitulation spike low overnight Sunday and into Monday.
Yeah, and ironically enough, too, as all of this is going on, we have the Asian central banks, primarily China and Russia to some extent, maybe even some in Latin America and so forth, certainly the Middle East as well too. But I mean, the reports that I'm hearing out of Asia is that China is like taking down an enormous amount of inventory to the tune of over 50 tons of gold just today. I mean, we don't know the numbers, and we will have a better sense as to what's going on with a little bit of time just to let the dust settle a bit. But here we have China, who's reported to only have 1,050 tons of gold officially, yet, and that was reported, I believe, in 2006. And meanwhile, we have this ongoing siphoning effort by their gateway through Hong Kong, which is public information, and to the tune of 500 or so metric tons of gold within the last year alone having flown through that gateway. It's sad, ultimately, that as the Western central banks are trying to maintain the edifice of this bankrupted and insolvent financial system with this artificial liquidity pump, that in order to achieve that, they must maintain lower prices, and in turn, the wealth of Western nations is flowing eastward. But such is the nature of empire, and unfortunately, the powers that be that are running Western governments are not really looking out for the best interests of the citizens.
And the mainstream financial media is completely ignoring that story. In the middle of the week, I think it was Wednesday, when the big Cyprus gold sales story broke, and the media was all over. Reuters publishing the story that they were going to sell off 10 tons of gold on the market. That same day, the story broke that China imported, I think it was 85 tons in December alone from just via Hong Kong. So that's not talking about any other places, just via Hong Kong alone. And nobody mentioned that story, covered it. And we're talking about 9 times the amount of, even if Cyprus did liquidate their 10 tons.
Yeah. So
that would be more than sucked up instantly by the Chinese.
And it really is just a cover story.
Yeah, right. Really, the story today is in the evaporation of physical. The paper raid, which is what we see towards the bottom of every major decline we've had, and really the physical is evaporating. APMEX is, and this is really a sign, I think, APMEX is paying now. They're paying buyback, like a customer buyback. If you're a retail customer for 90% silver, their buy price is now $3 over spot.
Wow.
So that just tells you right there. The wholesale market, wholesalers, I mean, they're looking at $4 to $5 over spot, 8 to 10 week delays. So there's just no supply anywhere. Eagles and maples are being rationed. Premiums are jumping throughout the day. We set all-time sales records today, Friday at ST Bullion. I think we burned through nearly 10,000 ounces of silver. Our suppliers wouldn't even answer the phones when we're calling. And one of our suppliers even informed us that they'd already sold thousands of ounces of gold and hundreds of thousands of ounces of silver, and this is before noon today. So the demand for physical is really enormous, and is going to continue to result in widening spreads and premiums between the paper and the physical metal.
Yeah, and then the U.S. Mint in particular has been putting people on allocation as well. So they're from all different quarters. The physical market is basically tightening, and there's a lot of confusion amongst the average investor when they look at these paper price maulings compared to what's really going on in the physical world. I mean, when an APMEX, the largest or second largest bullion dealer in the entire country, offers a huge $3 premium over the paper price, it speaks volumes. I mean, the physical market is tight. You can't deny that fact, and I find with great amusement people talking about how the physical market is not tight, and that there's this whole problem with the U.S. Mint has everything to do with the inability of Sunshine Mint to produce planchins, i.e. blanks for the U.S. Mint. I mean, it's ridiculous. The physical market is showing signs all over the place that there's a growing disconnect between what's going on in the paper market. And on top of all of this, we just, as investors, have to stop that and pull back a bit and ask ourselves who in their right mind would try to liquidate a position of hundreds of tons of the equivalent of gold and silver within a span of minutes. I mean, if you want to get out of your position and you're a large owner, you have to work the order. I mean, anybody who's ever tried to do a large order for a trade for something as anything but a retail investor will know that that's the reality. And I think to some extent that sheer size of the operation that the cartel is managing is beginning to get people to sit up and wonder what's going on. I mean, just in the last week, Peter Schiff, who has been pretty skeptical about this whole manipulation, has in fact suggested that Goldman Sachs is probably working with the Fed because they have common interests to keep the price of gold down such that the Federal Reserve's policies look like they're working. And we provide a link to that direct interview if you want to check it out by looking at our write-up this week. But it's just interesting that as the cartel gets more aggressive, the pushback and risk that they face is that they are going to become more seen by just average hedge fund managers and market participants for what really is going on. It's just so egregious that they can't hide it anymore.
As you mentioned, any professional institutional investor who has a large position they're trying to unload, they certainly don't go into the market and telegraph and make an announcement that what they're intending to sell and what they have for sale. In fact, they do the direct opposite. They go into the market and they start hitting every bid and they act like they're looking to buy in size to create a buy spike in interest, and then they work out their position and unload their position into that action. So on a day like today when, as Andrew Maguire stated, over 500 tons of paper gold dumped on the market, that's not a position that anyone is dumping for profit.
And we could look at examples of George Soros as well, just in a broader scheme of time, not just for this day's trading. But he's a well-known hedge fund manager. People respect him. But if you actually look at his positions and compare them to his media statements, it's often the case that he's doing the exact opposite of what the media is reporting or he's speaking to as to his positions within the media. So, professionals, large investors, they don't dump counterintuitively and try to sell a position that ends up breaking down an entire door frame. They like to walk through the door and occasionally spread their positions out such that they lessen their exposure to a position that they want to exit. That's just the way things are. And these massive raids speak for themselves. It's a matter of the cartel targeting existing stop-loss orders that they can see because the order book is largely transparent, at least on the London and COMEX exchanges, not on the OTC market. And they shoot for them. And that's how we get these cascade waterfall declines, because existing stop orders basically translate into an open market sell order as soon as the price declines under the price target. So here we are, another week and another crash.
Right, another week, another crash. And
it makes you wonder what's going on in the background.
I suspect more than a few coin shops are going to be cleaned out over this weekend, with gold closing down nearly $100 on the day and silver down almost $2 on the day. So we'll have to watch early in the overnight hours Sunday and into early Monday for a possible capitulation to come. But the next week is going to bring quite a lot of interesting action. I think by next Friday, our listeners may be pretty positively surprised by some events that may come out that may have some pretty significant impacts on the gold and silver markets. So we're going to have quite a bit to talk about next week, but I suspect quite a few investors are going to be taking advantage of the paper gift this weekend if they can find any physical available anywhere. So make sure you check into the site and the write-up. Eric has written a tribute to the guys over at GATA, Bill Murphy and Chris Powell, so make sure you check that out. And for the SD Weekly Metals and Markets, this is the Doc and Eric Dubin. Thanks for listening.
Thanks, Doc.